Hi, and welcome to this week's Stockscores Market Minutes for January 26, 2015. So this week I want to talk about the difference between small cap stocks and large cap stocks. Small cap stocks are those with more alpha. What I mean by that is they move more on their own story, and as a result, when small caps are hot, it is easier to beat the market, simply because these stocks can move quicker. A $2 stock can move to $4 much more easily than a $20 stock can go to $40. Large cap have more beta. What that means is that they are more closely correlated to the overall market. A stock like Microsoft will move in similar fashion to the NASDAQ 100. A company like General Motors will move more like the Dow. But on the other hand, small cap stocks also have less liquidity. It is much harder to move in and out of small cap stocks, and it is possible for those stocks to move against you very quickly because of that lack of liquidity. If a large investor wants to sell a position in a short amount of time, they can move a small cap stock, whereas they scarcely have an impact on the large caps. So when trading small cap, realize that risk comes from that lack of liquidity. When I'm day trading or swing trading the smaller cap stocks, I recognize that I can have much more slippage in my trades because of that lack of liquidity. And by the same token, when you're trading large cap, you've got the benefit of liquidity, but the downside is that much of the stock's price performance will be based upon the direction of the overall market. And therefore, if you're buying a large cap stock, you also have to do your analysis of where the overall index is likely to go, simply because those larger cap stocks will tend to move with the general market. Now, ultimately, we want to trade what is hot, and that will change over time. But how you approach different market cap type stocks will largely depend on liquidity and alpha and the presence of alpha. All right, let's get into this week's analysis. So the US stock market rebounded nicely this week. It held some support. I wouldn't say critical support, but had it broken through that 200 level on the SPY this week, we probably would have gone down to test that long-term green upward trend line. So it held there. We're right in the middle of the channel, and that means we're going to sort of be grinding upward down. It's hard to say which. My sense is more likely to go higher than lower, but I think it can go either way. So long-term trend remains bullish, but expect that the volatility in the near term is going to continue. The underperforming Russell 2000, the small cap stocks, which is the area of the market that I prefer to trade, has been dead for the last year and continues to be stuck in a narrow range. If we can break through that red line of resistance, well, then money might actually start to flow into the small caps and we can get the return of alpha. However, in the meantime, we also want to be watchful that that green line of support that I've drawn, somewhere around 115 on the IWM, doesn't get broken, because if it does, we're probably going to move back down towards 110. On the TSX, we had a good rebound this week, largely because of strength in the miners led by the precious metal stocks. But there's still a lot of volatility, and that's because there is a lot of uncertainty in the Canadian market. And so if you are an investor in Canada, be very aware that there's going to be lots of ups and downs in the near term. I'd like to see that red downward trend line get broken. We're right at it now. But I think for that to happen, we're going to have to get some support from the energy sector. And I'm not sure that that's going to happen this week because oil had a pretty weak close on Friday. The juniors are trying to hold some support. I mean, big picture, long term, this is still such an ugly market. But at least there is the start of the formation of a rising bottom. And that's because of the miners gaining some strength. I think you've got to be real cautious with this market, be very selective. It's not only resource stocks on the TSX Venture, so there are some areas outside of resources where you can consider things, but it's not a big number of stocks on the TSX Venture that are not going to be affected by commodity prices. Treasuries continue to be in that parabolic upward trend. You know, really they should have pulled back a long time ago, but they haven't. They haven't even given a signal that they're going to pull back, and so you have to remain bullish on this market, but realize it is risky, and eventually we will get a sharp pullback in the bond market. US dollar continues to be real strong. The surprise news from Canada that it was lowering its interest rate this week. And then, of course, the quantitative easing program in the European Union. All of those things contribute to the strength of the US dollar, which is pulling up and away parabolic from that upward trend line and is still yet to show any sign of weakness. It'll come, but right now you got to remain bullish on the US dollar. And this chart here with, I guess, the most lines on it is the gold chart. I think it's probably of interest to many investors because it's been a pretty hot trading area lately. There's been a lot of action in the gold stocks. And here we can see the first break of that long-term downward trend line last week. This week, following through with a break of the more shallow trend line that built since 2014. And really the gold market, and the reason I've drawn so many red lines in here is just to show that although there is some strength here, it's got a lot of pessimism to overcome. There's a lot of lines of resistance, those red lines that I've drawn, that it has to work through. So I think you still have to treat this as a trader's market, one where you can make real good profits with 2 or 3 week hold periods. But in the short term, wouldn't surprise me at all if we get a little bit of a pullback in the gold stocks and then build some momentum for perhaps a few weeks down the road. I want you to be pretty cautious with some of those gold miners next week because it did start to show some signs of some profit taking in the short term. And here is the oil chart. As I said, it broke to new lows on Friday. It was trying to hold that support. It actually did a pretty good job this week of trying to hold some support, but it just couldn't do it. And at the end of the week, we closed at a new low. And so I think you still have to remain very bearish on the oil market. It is heavily oversold. It is emotional, and it will bounce eventually, but it's trying to catch a falling knife here that is tough to do. I think the thing you want to do is wait for this market to break from a rising bottom. Notice every bottom is a new low. We see new low, new low, new low, new low, new low, new low. It was trying to build a rising bottom, but it never broke up from that rising bottom this week, and that's why I remain bearish. And finally, the chart of the VIX. We've had a lot of volatility the last 7 or 8 weeks, and it continues this week. Lots of big ranges in the overall market moves, but we are, I would say, at the bottom of its range for the VXX, and that points to perhaps a little bit of a pullback next week in the market. I don't think this is a reliable indication of that's happening, but certainly adds a little bit of a concern that after a decent week last week on the S&P, we could get a little bit of a pullback next week. So my outlook then, I remain long-term bullish on U.S. stocks, short-term neutral. I think we're going to grind our way sideways for a while. Long-term bearish on the Canadian market. It is trying to stabilize, so I've put a neutral rating in the short term. Gold neutral in the long term. It's showing some good signs of at least bottoming, and bullish in the short term. But as I said, wouldn't surprise me if we get a few days of pullback early next week. Bearish on both time frames for oil. U.S. stocks rebounded from support to maintain the trend. Canadian stocks bounced back this week, but expect extreme volatility, making it a market for traders and not for the faint of heart. Gold is recovering, but expect volatility along the way. Oil back to new lows, remain bearish on oil. Well, that has been the Stockscores Market Minutes for January 26, 2015. Have a great week in the market and trade well.